The topic for today's Global Connect is Fintech and Forex. We have with us today Mr. Illamparithi Jayabalan as our speaker. We welcome you, sir. I welcome our beloved director, Dr. AGV Narayanan, and I welcome our faculty members, students of DJAME, and all other participants for today's Global Connect. Now I request my friend Sandhya to introduce the speaker.
Surya, he is Illamparithi.
Illamparithi.
Illamparithi. Am I right, Illamparithi?
Yeah, absolutely, sir. Absolutely.
Right.
If people understand Tamil, yeah, many of them, it's rising sun actually. Paridhi means sun. Ilam is just young. I don't know whether I'm young or not. Yeah, that's the.
Okay. Good enough. Yeah, Sandhya, please.
So, good morning, everyone. Mr. Illamparithi Jayabalan completed his diploma in leather technology from Institute of Leather Technology in Chennai. He completed his BTech Leather Technology from Alagappa College of Technology in Chennai. Then he completed his Masters in Bharathasan Institute of Management, Trichy. He also completed his advanced program in Fintech and for financial blockchain. His career, his focus areas are remittances, Fintech, travel cards, digitization, and foreign exchange. He worked in various leather tanneries from 2001 to 2006 before joining Stahl India Pvt Ltd as a leather technologist cum sales executive. Then he joined Thomas Cook India Limited in its flagship program for middle-level executives, Thomas Cook Middle Leadership Program. He also headed the state of Telengana and Andra Pradesh foreign exchange business until 2019. He made the business sustainable at profit and loss level by focusing on people, products, and performances. He also expanded the business by opening new branches. He concentrated on the overseas education segment and remittances needs. The role also included managing corporate businesses, TCS, Deloitte, Dr. Reddys, etc. Then he moved to Thomas Cook Lanka Pvt Ltd, a wholly owned subsidiary of Thomas Cook India Limited, as the country head of foreign exchange business. He managed the safety steer the business with the help of the team in spite of the COVID impact and managing the relationship with central bank, airport authorities, and other business ecosystem players. And now I request the speaker to take over the session.
Over to you, Illamparithi.
Yes, sir. Thank you, Sandhya. Firstly, very good morning to one and all present here. And sincere thanks to Dr. AGV for his generous invite to this session. And I'm extremely happy that I could join today for this interactive session. And I also want to thank Dr. Sriraman Nandi and Dr. Deepa Rajesh for coordinating with me all this while. And thank you, students, for your elaborate and generous introduction. It's okay. So I was just telling Professor Sriraman that I'm neither a finance guy in the typical MBA parlance, nor a technology guy, but I happen to be at this inflection point of these two phenomena just because that I've been in this foreign exchange industry where remittance and payment things are happening. So that said, I will just start sharing my screen now. Is it visible, students?
Perfect.
Okay. Just before starting, at the end of every slide, we can, have a quick interaction if need be. So please feel free to interrupt and interact. The topic, as we have seen, is fintech and retail foreign exchange and remittances. So the plan is that we will first look at the fintech and its trends, what is happening around the world, and what is the Indian landscape when it comes to fintech. Then we will shift the gears to foreign exchange business, in which I've been working for the past 12 years. We'll also look at the remittances, the different types of remittances that are being undertaken in the country, and the other aspects. Before getting into the topic, I would just want to or try to understand from the students as to what could be the objective of fintech as per your understanding. If you can use your chat boxes, or you can unmute and speak. What do you think that could be the objective of fintech?
So good morning, sir. My name.
Good morning, Mahalingam.
So my name is Mahalingam, first year MBA, sir.
Good.
Sir, I feel fintech technology is like it helps finance along with the help of technology, sir. Financial services to provide better.
You're there. You're there. Could there be any other objective of this industry?
I don't know, sir. It helps with along with the innovation, sir.
Okay. Okay. Through innovation, it should help somebody.
To us, sir. To everyone.
Yeah. Yeah. Okay. Okay. Cool. Is there any other views?
The speed of money transactions.
Okay. 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 You mean to say that it helps in faster transfer of money?
Exactly.
Okay. Cool. Okay. Let us
You need not be a finance company, but you use technology. You need not be a finance company. You need not be in the banking industry. But you can do services like financial services.
Okay. Okay. I'm just trying to understand the objective of it.
There is an answer in the chat box.
Okay.
Could you view the chat box?
Yes, sir. Yeah, yes, sir. Simplify
Yeah.
financial transactions. Yeah, that's a good thing. It is almost there. Actually, I have something in mind. Whatever you are saying is absolutely right, but it is just that I have kept something in my mind. I'm trying to get that from you. Okay, let's move on. So as the how I look at fintech is that it's the application of technology into the financial services industry to increase the customer experience. If you look at the real objective, it is actually increasing the customer convenience. No technology will sustain if it doesn't meet the objective of enhancing the customer experience. There are fintech companies that propped up from the big names like JP Morgan and even Santander, like a company called Fin and another company called PagoFX. So these are big companies, right? They started, but then they had to close down because it was not meeting the objective. The real objective is to keep the customer at the core and understand his needs and see if whatever the innovation that we bring, meets their needs. It is a typical marketing objective, yet it applies in fintech as well. So what are the technologies that are used? So you would have heard this name day in and day out, the artificial intelligence and machine learning. It is applied in the robo advisory and predictive analysis. You have the blockchain and cryptocurrencies. That's another technology. You have cloud services that comes from the technology companies, and the RPA, which is robotic process advice automation. So these, along with certain other technologies, when combined together and applied in financial industry, that's where we get the fintech as a separate industry. So the subsets of fintech, could be the regtech. Regtech is nothing but regulation technology. Insurtech, you would have heard the companies like Policy Bazaars and all. Paytech, in fact, fintech was always treated synonymous with the paytech actually, but it is just beyond that actually. So paytech is yet another thing. and then wealth tech. So we will look at all these things in a slightly more detailed way as we go forward. So what are the trends in the fintech? As we have seen, a robo advisory, it's like it's a software that manages the investment tasks like the asset allocation and the portfolio management. Some of the companies that are known across the world are Wealthfront, and in India we have a company called Funds India Grow. These are the companies that are into this portfolio management through their robo advisory process. And then the next trend is the contactless payment, especially during the COVID, when we were not even able to touch our known ones. Always handling the cash was a problem. So contactless payments were a solution towards that objective. Previously we used to have chip and pay in the cards. Now we have the contactless tap and pay methods. There was a wearable introduced by Visa some time ago. You just have to have a band in the hand, and the band comes with the chip in it. You just have to wave your hand towards the point of sale machine. And we would have already seen the digital wallets. There's so many digital wallets that are available in our country now, starting from Paytm and Ola Money. There are so many companies that have popped up. So this is another trend. And then BNPL, buy now, pay later. Yeah, it's actually, it is also called as POS financing, point of sale financing. Basically it tries to ease the process at the checkout. Checkout is when you purchase everything, typical online experience. You go to an e-commerce site and then buy something. You shop everything and then come back and then try to pay, and then you might feel some some problems. Those are called as friction. It could be anything. So at that point in time, what these companies are trying to do is that they are making you pay at that point in time through extending a credit to you. It is a very, very simple process, and it all emerged with the PayPal's Pay in 4. So Pay in 4 means you buy now and pay in 4 installments. And then the players that are in this industry are like in India, Lazy Pay, Zest Money, Amazon Pay Later are all concentrating on this particular segment now. And then the open banking. Open banking is simply opening up your customer data to third-party providers through the API model. So what they do is that, for example, in India, we have introduced something called account aggregators. It's a very, very new thing to India, and I think it is going to be the next big thing in India. So it's actually our pathway towards the open banking. So what happens is that, suppose if I am a customer, I am maintaining an account with, say, State Bank of India. I would have provided all my KYC documents to State Bank of India. Now I am applying for a loan with, say, Kotak Mahindra. Now the banker asks me to provide me all those set of documents again in order for him to assess me. So for example, as a customer, I have to keep giving my documents again and again to every player in the financial industry that I approach. So in order to avoid this, what they're trying to do is, there are these companies called account aggregation. Every time when I approach a new bank or somewhere else, the account aggregator takes the permission from me to access my customer data from the banker that I bank with. So therefore, the moment I give the permission to certain documents, for example, I may give a
Please.
Okay. Yeah. So I may give a permission to access my PAN card that is stored with State Bank of India, maybe my Aadhaar card, whatever it is. The moment I give access, the new banker can access those details directly from the banker that I bank with right now. So it eases a lot of things. So this is India's answer to the open banking. It was actually conceived by Mr. Nandan Nilekani, and it is taking shape now. It has just been introduced, a couple of years ago. We are going to see a lot of innovations around this account aggregation. And the next is digital banking and neo banking. So the idea is to make the customer sit at the home, right from account opening to transactions, and to whatever he wants to do with the bank. So the best example for digital banking, as I have seen, is DBS. With the DBS, you in Singapore especially, you don't need to go to the bank even for opening your account, and you can start transacting on it on your own, sitting at your home or wherever you are. Neobanking is also kind of the same concept, but then it is not exactly a bank like DBS, morphing into a digital banking. It's like these are like digital native companies, pure fintech players who want to aggregate the banking services and have a partnership with the bank and then extend the services to the customers. So that's how the neobanking works. Then the blockchain, most of us would have heard Bitcoin, and Bitcoin is based on the blockchain technology. It is nothing but a distributed ledger technology. So you can have smart contracts. We can discuss about smart contracts later. Basically, it eases the payment process, especially when you are transferring money from one country to another country, the cross-border payments, remittances. Blockchain is going to be a real game changer. Then we have RegTech, which we have already seen. It is for example, in Europe and all, you have this GDPR compliance, general data protection regulation. The customer data that we collect has to be protected in a format. It cannot be leaked. It cannot be shared with anybody without the customer's consent, and GDPR talks about it. And the moment we talk about RegTech, actually we have to get the customer details in many form in order to do the due diligence. We'll also see what is due diligence. Probably, the professors would be aware, but the students, if you want to look at what is due diligence, we'll discuss it later. So the RegTech is also shaping up, the real-time screening of internationally sanctioned names. For example, during this war, you would have heard that the governments are saying that the SWIFT, which is a platform, should not allow remittances, to certain banks in Russia. So these are sanctioned banks as of now. And then PEP means politically exposed person, and we need to be a little more careful when we are dealing with PEPs. So these are some of the trends that are happening. There are more trends that will be impacting the fintech. I just thought these would be critical to understand for now. Can we move on to the next slide? If students want to raise anything, we can interact before moving to the next slide.
Illamparithi, with reference to this open banking.
Right, sir.
You said, suppose I have an account with the SBI and I would like to avail a loan from Kotak Bank. Kotak Bank can have an access to all my documents from SBI. Is it happening through any intermediary in between?
Absolutely,
in between SBI and Kotak?
Yes, sir. Yes, sir. There are account aggregator companies that are coming up now.
Okay.
And he will act as an intermediary between the SBI and say Kotak.
Okay. Okay.
And then in this case, if you have documents with say SBI, he becomes the data provider.
Right.
And the Kotak becomes the data seeker, data user, basically.
Right. Right. But how about the credibility of the intermediaries?
Yes, sir. So actually, it is just picking up, sir.
Yeah,
and as the phenomenon takes shape, I think RBI will be getting into this space. But definitely the account aggregator is again a regulated entity. Any regulated entity is prone for audits anytime.
Right. Okay.
So that surprise is always there.
Sir, good morning, sir.
Yeah.
I'm Sir, does the development of fintech companies will affect banks to a greater extent?
Okay, that's a very nice question. If fintech companies are going to enable the traditional banks, they are not going to compete with them. They are going to, if I have to use this term called competition, they are going to cooperate and simultaneously compete with the banks. They are not going to replace for sure, because banks have a different bandwidth, different reach towards the customers. But fintech companies will definitely play a part in enhancing the service levels of the traditional companies. You are right. Fintech will not replace, but fintech will play a large role in digitizing the banks.
Okay, sir. I have one more question, sir.
Yeah.
As you said that many of the Russian banks have been banned from using SWIFT. Now they are saying something of a rupee ruble arrangement. They are speaking of rupee ruble arrangement in India. Will it be successful, sir?
Illamparithi, are you there?
Sir's there, but he has gone on mute. Sir, you are on mute.
Yeah, I'm sorry. So these are phenomena beyond our control. There are two governments that are involved. If the governments decide, they will do. But then, as of now, nothing has been finalized.
Okay, sir.
But the point that I was trying to drive is that the companies like SWIFT are actually the platform for all the money transfers, most of the money transfers that are happening across the world. But then this blockchain technology can replace this platform soon. And therefore SWIFT is also trying to adapt blockchain in its, in its plan of actions.
Okay, sir. Thank you, sir.
Thank you. Okay, thank you, Sindhura, for that question. So, so the next thing is the ecosystem. So why we need to look at the ecosystem is that, as you have just raised that question, will fintechs replace banks? It will not replace, but then it is going to be in that environment where banks will be a part of it. Technology company, any advancement in technology is going to affect the fintech. The e-commerce companies, as we were looking at the point of sale friction, through fintech there is a solution called BNPL to reduce that friction. So, and then the governments, again we have spoken, governments can actually make or break a business model, right? Because it all depends on how the governments pursue a technology. Even now means the Bitcoin is still perceived as a threat across the world. Many governments are not allowing it. So therefore governments intervention on fintech is very crucial. And then the regulators, governments do it through the regulators. For us, it is the RBI. RBI has different departments to have a control on what's happening in the fintech industry, and of course the customer, and they are the main thing, right? If whatever we do bring in technological innovations, if it doesn't satisfy the company, customers needs, nothing is going to be successful. So if you are trying to get into a fintech, or if you're trying to move a fintech company, start a fintech company, these are all the players that we need to be aware of, understand what they are doing. Every single decision that they may take will affect us. And why we are calling it as an ecosystem? An ecosystem is nothing but a symbiotic relationship. What you do affects them, and what they do affects you. And therefore this benefits of each other has to be borne in mind every time we think about a fintech solution. So that's why I kept this slide specifically. And then moving on to the Indian landscape. So the market size of Indian fintech companies were somewhere around the $66 billion in 2019, and it is expected to touch 150 to 160 billion in 2025. That's the size we are talking about when we talk about fintech. And there are now 18 unicorns in India itself, and around 87 unicorns are there across the world approximately. That roughly makes it to 10% in Indian soil itself. And then the UPI and JAM. I want to take a minute here and again pose a question towards the students. What do you think about UPI? You can unmute yourself and talk.
So it's a very good moving forward. We can transfer digitally and needn't make like physical money.
I'm sorry, you have a point there. I could hear physical money. Yeah.
Yes, sir. Like instead of physical money, you can like exchange digitally.
Right. Right. Okay. Okay. So in fact, you are right. Actually, instead of using physical money, how can we go or emerge as a cashless society? That's the whole objective of UPI. But then what happened? You would have heard, NEFT and such things even before UPI came into picture, right? NEFT, National Electronic Fund Transfer, and then we had IMPS, immediate payment system and such things. So there were a lot of technology even before UPI when it comes to cashless economy. But then the real hunch in the UPI is that it has integrated all the platform and made it interoperable. For example, if you have an account with, say, SBI, you just need a virtual ID. Once you get that virtual ID, which is your UPI ID, through that you can transfer to any account, any mode of transfer. So these are all integrated through an API, which is called as UPI. That's why we call it as unified payment interface. So what actually motored this is that, so as I told you, RBI wanted to bring in a common platform in order to increase the adoption rate of the cashless payments. That's one. And the next thing is that, simultaneously government also wanted to introduce the Digital India scheme, wherein the schemes like Pradhan Mantri Jan Dhan Yojana, which created a lot of banking accounts for the bottom of the pyramid. And then we had the Aadhaar and the mobile phones, which were like being adopted in every corner of the country. So what happened? The government has integrated all these things under JAM scam, which is Jan Dhan Yojana, Aadhaar, and mobile. This was also called as JAM Trinity. And this has played a very crucial role in the adoption of UPI by even the common man. And till now, UPI has been one of the greatest successes across the world when it comes to the financial inclusion. This, thanks to our sheer population size and the government's initiatives like Digital India. So in February 2022, there were around 304 banks that are participating in the UPI scheme. That means across these 304 banks, the transfer is easy, seamless. And then nearly 4.5 billion transactions have happened in February alone. That we are not able to think the number, that big a number of transactions. And then the value of transactions were at 8,26,000 crore. This is the sheer size of UPI. Without understanding UPI, one cannot come across Indian fintech landscape. And then what next in Indian fintech? So as we have already seen, account aggregation, this is our answer to the world's open banking system. And I think probably if we are going to talk maybe after 1 or 1.5 years later, this would have taken a mature state. That's my prediction. And then ONDC, like UPI, which happens between the peer-to-peer and peer-to-merchants, which is like a buyer to, peer-to-peer is like between the customers, and a peer-to-merchant is like a buyer to a company. So what government wants to do is that to bring in the same kind of adoption rate between the small companies, especially, Coimbatore is known for a lot of SMEs and MSMEs. With the introduction of this open network for digital commerce, the problem of payment friction at the SME level will also be eased. That's the plan. And we have seen that the fintech market size is expected to be at $150 billion by 2025. And then RBI is also helping the fintech players a lot. They have already introduced several sandboxes wherein if you have a product, you can go on live stream and live check your product in live condition, live environment. So to conclude, why it is important, as I have written here, fintech is not a mere portmanteau of finance and technology. It is actually a real game changer, which has the impact on the bottom of the pyramid, and therefore it is a career worth pursuing. So before shifting the gears to the foreign exchange and remittances, if there are any questions or any points to discuss, we can get it discussed now.
Illamparithi, can you throw more light on the opportunities for MBAs in fintech industry?
Right, sir.
How they are supposed to equip themselves?
Correct, sir. Sir, I think, definitely you would be thinking about introducing certain, courses in the curriculum, maybe for the future or now. Yeah. That's one way. But definitely, sir, anybody who wants to get into a bank will have to be a fintech expert going forward. So that means the entire finance landscape will be transforming into a fintech landscape soon. So the opportunities are immense. The entire banking system is going to be based on the fintech players. Okay. So there's an immense, potential there. I was not a fintech enthusiast until 2015-16, I think. Then I got to understand how the wallets got transformed into an UPI system. Yeah. And within some months, what happened? People who are using wallets have moved towards the UPI because they do not need to park some money in wallet. So the transformation has been so quick. Yeah. And now there are so many companies that are coming in this space, for example, the audits, even the compliance is going to be based on the technology. We are doing video KYCs at our company now. Video KYCs, if we start doing video KYCs, we don't need to get the customer at our office for anything. Yeah. We just do the video KYC and then get his consent and authenticate in some technological form. We can get his currency delivered at his home, like how a grocery is delivered. Okay. So a traditional company like Thomas Cook is like kind of metamorphosing into a fintech company when it comes to the foreign exchange business.
Okay. That's nice to know.
Illamparithi sir.
Yeah, hi, Vijay.
Am I audible, sir?
Yeah, absolutely.
Myself, Dr. Vijay, sir, head of the department V8 Institute of Arts and Science Road.
Please, doctor. So please don't call me sir. So all of you can call me Ilam.
Yeah, no problem, sir. No problem. Your name is very good. That's why I'm telling fully Illamparithi.
Thank you so much. Thank
you. Actually, I am having one doubt, sir.
Right.
In the NSC and BSc, there is one company called PB Fintech. No?
Okay, sir.
Whether what you are discussing now, fintech, whether it is actually same with the PB fintech or it is entirely different, sir? Because Thomas Cook is just an extension of being fintech technologies. Am I correct, sir?
No. Thomas Cook has been in remittance industry, sir. I mean, yes, of course. We've been transferring currencies from India to abroad with RBI's permission.
Yes.
And as the technology is being adopted in the remittance space, and there are other things that I will talk about in the next slide when I speak about Thomas Cook. So we are now adopting technologies that are impacting the fintech as well. For example, as I told you, video KYC is a part of it. And we have introduced something called document management system, wherein all the documents that we collect are now digitized. And if somebody wants to do an audit of our transactions, they don't need to come to my office and physically verify all the documents. If we give access, they can sit at the comfort of their office and do the audit at our company. That's the point where we intend to go. I'm sorry that I don't know about this company PB Fintech. Probably maybe we will discuss about it once I have a fair idea about it.
Definitely, sir. Definitely, because that PB Fintech is doing well in the NSE as well as in BSE, sir.
Okay, sir. Okay.
In fact, your Thomas Cook is also doing very well. I have got some share with Thomas Cook. It's very nice one.
Through this.
Thank you, sir. Thank you, sir. Thank you. Thank you.
Okay, got it. Thank you very much. Thank you.
Yes, yes, yes.
Sir, we have a question from Kaushika. Yes, Kaushika, you can ask.
Good morning, sir.
Good morning.
I'm Kaushika from First MBA, student of TJME. My question is, how does the startup ecosystem favors fintech startups?
Okay, so what we call as, digital native companies, right? So, for example, Thomas Cook is a digital migrant company, and there are a lot of digital migrant banks. All the banks almost in India are digital migrant. That means, traditionally they were operating in some form, the physical documents, everything was like physical. And as the technology develops, they start adopting the technology and then try to provide a better solution or convenience to their customers. That's what we are doing, and that's what we are calling as digital migrant companies. The startups mostly, whatever which you are seeing now, are digital native companies. They are starting off as a digital company, and therefore they are bound by innovations, whereas we are bound by process. If you ask me, how do you do a transaction easily? First, I will, as being a traditional player, first I will talk about what documents I should collect, how should I assess the customer, whether he is a genuine customer or not, and such things is what I will be looking at. But a fintech player, he directly brings in technology and then talks about technology. So at some point in time, there will be a balance between our approach and their approach, and that's what we will be looking at. That's one. And secondly, since you asked this question, for example, banks have immense database. If you go to State Bank or any other public sector banks or even private banks, they have a lot of data in them. Suppose some of you are a regular customer or a loyal customer of a bank. I'm not talking about the regular calls that you are getting, but I am saying, has anyone seen your transaction pattern and come up and given you a solution? Hi ma'am, I understand that you've been spending rupees 10 every week on, I'm just taking a number, okay, every week on ice cream. Why can't we have a direct tie-up with the ice cream company, and then whenever you go and have an ice cream, just wave a card and come back, you don't need to pay? I'm just saying, if the banks have immense database with them, and if they are able to analyze the database in some form and come up with a custom solution for most of the customers, then they can be more profitable and they will also help the customers in some form. Unfortunately, because of this technological bandwidth issue or the cultural issue, banks are not able to do. This is where a fintech company, if it is a company that is strong in analysis, they can come, have a tie-up with the bank, and then start accessing the customer data of bank in a rightful manner, and then start providing certain custom-made solutions to the bank customer. So fintech can influence banking system or any other traditional players in any form. Okay. Hope I have not confused you.
No, sir. Thank you.
Sir, we have two more students raising hands. Shall I take those questions, sir?
We can take, sir. We can take if yeah. Right.
Gokul, you can ask. Yes, Gokul, you go ahead with the question.
Yes, sir. Should be familiar with data science to pursue career in fintech industry.
Yes, if you are familiar with data science, then it is going to be very helpful for you. Yes.
Yeah, Dvaitya, you can ask.
So thank you for the illuminating session, sir. I have a question for you. What are the various strategies that you use to evaluate risk in fintech industry?
Sorry, used to evaluate risk in fintech. Okay.
Fintech, sir.
So you are asking me what are the methods or what are the ways, or just the way? I mean, yeah, got it. Both are same. Okay. Risk in fintech industry or risk in financial industry?
The risk in fintech, sir. The strategies that are used.
So basically, there is no much risk in fintech per se. There would be risk in financial industry. For example, I was telling you, I'm just taking an example. Suppose if there is a customer at my counter, okay, I am the person who is doing the transaction. In finance industry, what happens is that the person who does the transaction, right, the cashier or whoever you see at the bank, is supposed to do something called due diligence. That means based on the KYCs that you give, based on the documents that you give, and based on his or her interaction with you, they should be able to assess whether you are a genuine customer or you are trying to do a whatever it is, whatever it, money laundering or whatever it is. So they are supposed to assess. The responsibility lies at the person who interacts with the customer. So many a times it is very difficult for them to assess a customer. It is not possible, and therefore there is something called screening, right? So when you do the transaction, when you enter a name, when you enter a passport, when you enter a document number, okay, the system will be able to access the zillions of data that it has, and then will come up and throw a risk factor. It tells you that, so for example, Illamparithi is a risky name. It will throw some indicators to you at that point of transaction, so that you will be able to do an enhanced customer due diligence, which is called EDD. So fintech companies help that. Similarly, there are a lot of ways in which the fintech eliminates the risk. For example, as I was telling you that we need to keep the documents. RBI and the income tax department mandates a time period for us to maintain the documents for some years. For example, for RBI, whatever the documents that I collect, it has to be there with me for 5 years. And for IT department, I think it is 8 years. I need to check. Just there is a number of years that have been mentioned. So I'm supposed to keep these documents physically with me, so that whenever the authorities want to audit or whenever they want to access a document, I am supposed to provide as a financial company. What if the documents are like going away in some disaster? Or what if I'm not able to bear the cost of maintaining the documents? That's where the fintech companies provide a solution by way of document management system. So the moment I collect a document, I store it in this document on, say, whatever it is, a cloud or something, and it is going to be there with me for ages with a minimal cost. And so therefore fintech actually is going to reduce the risk that has been faced by the traditional players. Fintech per se, I don't see a risk, except the technologies like blockchain, wherein when we initiate a transfer, though blockchain brings in a lot of ease while transferring the money, the transparency is a risk. It can allow illegal entities to transact without the notice of the government. So there are some areas where the risk is prone, and that is why governments are taking careful steps when it comes to bitcoins and such technologies.
Thank you, sir.
Thank you, sir.
Thank you. Thank you.
So one more student has raised the hand.
Yes, sir. Yes, sir. Mohammed Rasi.
Yes. Mohammed Rasim, you can unmute yourself.
Yes, sir.
Yeah.
Hi.
Hi, sir. I'm Mohammed Rasim, first MBA.
Hi, Rasim. Yeah.
Tell us about the fintech problem you have faced.
Okay. Okay. So as I told you, the main fintech problem that we've been facing was like, ensuring the due diligence and how to prove to the authorities that I have done my due diligence, right? When I transacted with the customer and who happens to be a wrong customer. So when I embed, through APIs, the screening system in my, software or applications, then I am reducing a risk. So in our company, we have done it actually. We are spending a lot of money in actually screening the customers and getting stuck to the rules of the game. So that's one thing. And we have introduced the document management system that I've already told, and we are taking a lot of other initiatives like purchasing Forex through app. We call it as Garpe Forex, Forex at your home. So many a times people feel that I order the costliest of items that reaches my home. For foreign exchange, you are making me come and travel to your office. So these are like customer complaints, and we are resolving. I'm not saying we have resolved, we are actually working on that. Right now, around 30% of our transactions are happening completely online. So these are certain, I would not say problems, maybe some inherent frictions that we have resolved with the help of the new technologies.
Yes. Yes, sir. Thank you, sir.
Thank you, Rasim.
Yes.
Hello, sir.
Hi.
Can you hear me? Yeah, this is
Yes.
Deepa here.
Hi.
How are you doing, sir?
Thank you, Deepa. Thank you. Hope you're doing
Okay.
well.
Sir, my question is with regard to the central bank digital currencies that have been newly introduced. Is it going to help the fintech industry, or what do you see would be the impact of this?
Definitely, many fintech companies have been looking for a move from the government like this. I think Professor, right? You
Yes.
are, yes,
Yes.
okay.
Yeah,
Professor,
I have spoken with you.
Yeah, got it, ma'am. So this has been a long ask from many fintech players, especially people who are trying to adopt the cryptocurrencies. But then for the government, it is not so easy to allow a new technology just like that, because it is going to impact, it is going to be a threat to the money laundering. What to say? The government is trying to thwart money laundering in many ways, and these new technologies can allow it easily without the without the intervention of the government, without the knowledge of the government. Therefore, our government has also taken its time to introduce some form of crypto. It's not fully crypto as of now, but then it is going to help the ecosystem. And whatever comes, in the form of CBDC, it is again to ultimately help the people in some form, like how the UPI has done. But then when the UPI was introduced, even the introducers were not expecting this kind of an adoption rate. Now that has happened, I think we need to wait and watch actually, because the CBDC that we are talking about nowadays is not a common CBDC for all the countries. It's like every country is planning to have its own CBDC, and how we are going to integrate the other country, platforms. That's the main question. If that could be resolved, then it will be a real game change.
Thank you, sir.
Thank you.
There are no more questions, sir.
Right. Thank you all. So then I think it's time to shift the gears towards the foreign exchange business.
Yeah.
You would have seen this name, LRS. LRS is nothing but liberalized remittance scheme, which is nothing but that's the scheme introduced by RBI under the Foreign Exchange Management Act to allow the resident Indians to buy foreign exchange or transfer foreign exchange, basically the outward remittances. Under the scheme, any resident Indian is given a cap of $2.5 lakh per financial year for certain prescribed purposes, and I will show you those purposes in the next slide. So there are two types of remittances, as you would have seen by now. One is outward remittances, in which this LRS is a part, and the inward remittances, there is a scheme called MTSS. About that we will see in the next slide. So LRS, the moment we talk about LRS, it's like 18,761 US dollar millions as of 2019 to 2020. That's the size of foreign exchange business that we are in. So in this, the predominant segment is the travel. For example, if you are traveling abroad and you need to make the tour payments to the foreign entities that are arranging your tours, that comes under this travel segment. And you will also take carry currencies in your hand in the form of currency notes or cards. That comes under this segment. And then the students who are studying abroad, for example, in India, if we have to pay the tuition fee to a university or any other educational institution, probably gone are the days when we were paying the DDs. Nowadays we are transferring the fees through the online platforms. But when it comes to abroad, you need to have a specified player transferring it. It could be a bank or it could be a licensed companies like Thomas Cook. So that comes under the studies abroad. Even the students also take the cards when they travel. I will talk about it in a while. And then the maintenance of close relatives. It is like, say if my brother is staying abroad, my close relative is staying abroad. If I remit money to him from India, that comes under this maintenance of close relatives. So these are the parts of this LRS scheme. Like a company like Thomas Cook India is doing it day in and day out. To initiate a remittance, we need to have something called nostro account. Nostro account is nothing like nothing but the foreign currency account that we maintain with the international bankers. The moment I want to say transfer some money to some country, I actually maintain some amount of dollar in my account. The moment a customer pays to me in Indian rupee in India, I initiate a transfer from this dollar account to the foreign entity. It may be university or anybody else. So that's how the remittance works. The cross-border remittance works. So that's the nostro account. So the types of licenses in this industry are like authorized dealer category 1. Almost all the banks are allowed to do foreign exchange transaction. And in the banks also certain branches cannot handle, so they need to have this license. And then authorized dealer category 2. In fact, Thomas Cook was the first category 2 license holder in the country, and for many years no other player was there in this. So category 2 also handles the same type of foreign exchange transactions. They are allowed to open the nostro account, because not everybody can open the accounts, nostro account. So category 2 holders can open the nostro accounts and maintain the dollar, pound, euro accounts with the international banks. There are some other players as well. And then we have the next category, which is FFMC, fully fledged money changers, who are allowed to buy or sell only the currency notes. Suppose if you find a money changer, somewhere nearby you, if he is having FFMC license, technically that FFMC is supposed to do only the purchase and sales of the foreign currency notes, not even the cards. The cards are licensed only to the authorized dealers. Yet the FFMCs can have a tie-up with the AD category 1 or 2 and then sell the cards. And the next category is the RMCs, which is like restricted money changer. They are restricted only to purchase currencies from the customers. For example, if I am a foreign traveler, I am in, say, India in a hotel. I have $10 with me and I need Indian rupee. So if the hotel is having this RMC license, they can the customer can give this dollar to the hotel and then get it converted. So these are the 4 categories of licenses that are given by the RBI to the Forex players. Now the products and instruments, right? So what we do basically is that we have something called currency notes, which is nothing but the cash, and the cash is capped. Suppose if you're traveling abroad and you want $10,000, you can take only $3,000 in the cash form. Beyond that, we cannot take in the cash form. So there's a limit for the currency notes. And then Forex DDs, especially in a scenario like students going abroad, they can take application DDs and then courier it to the universities and apply for a course in abroad university. So DDs are used for that. And then the traveler's checks. The interesting point to note here is that traveler's checks was kind of introduced to the market or invented by Thomas Cook himself in 1880s. So, but then we are not a major player in that industry. American Express is the major player in traveler's checks. And then there's a company called Travelex, which is also issuing traveler's checks. The advantage of traveler's checks over the currency notes or cash is that it is more secure. For example, if I lose $100 bill, I lost it forever. Suppose if I lose a traveler's checks, it comes with a number, identification number, and it is also accepted across the counters only when it is countersigned by the buyer. For example, when I buy the traveler's checks from a Forex player, I would have signed it. When I use the traveler's checks to buy something across the counter, somewhere, I go and drink a coffee and then give a traveler's checks, I'm supposed to sign it again. Only then that traveler's checks will be accepted by the issuer. So the security feature of this traveler's checks is better than the currency notes, because even if I lose 10 traveler's checks, basically it is not countersigned. And secondly, I can immediately report to the issuer and then stop the encashment of these traveler's checks. So that's the advantage of traveler's checks over the currency notes. And then we have this Forex prepaid cards. It is nothing but a debit card. So what we do is that, suppose if somebody travels, for example, Professor Sri Raman travels abroad and he wants to take, say, $10,000 with him. So what we do usually is that we give him this card and then load the card with $10,000. He can go and swipe the card anywhere else. It is accepted across all the merchants, in the world. And the best part is that it is also secured. The second best part is that it is reloadable. For example, if I am a student staying in, say, University of California, and tomorrow I need a lot of money from my dad from India. So sitting in India, he can actually load my card. He can go to any Thomas Cook counter or a bank or the issuing company, and he can load it from there. So that's the advantage of having cards with us. So these are some of the products that are available in the foreign exchange industry. Now moving on to the inward remittances. Some of you would have actually seen companies like Western Union, MoneyGram, right? The general perception is that if somebody wants to buy currency, they go to a Western Union outlet and ask for $1,000, which is not possible. And if somebody wants to transfer money from India to abroad, again, they might go to, say, Western Union and ask them, sir, I need to send $1,000 to my son. Can you send? Again, which is not possible, because the companies like Western Union, MoneyGram, and there is Transcorp, there's so many companies now. There's Express Money. These are all inward remittance company which come under a scheme called Money Transfer Service Scheme under the RBI's scheme. It allows the people who are living abroad, especially the Indians, to send money, to remit money back to India every month. So therefore, it was originally envisaged for the people who are not having the banking. Nowadays, everybody has. Yet this service, MTSs as a service, Western Union or MoneyGram, are helping people in terms of getting the credits instantly and wherever they go. The business model operates like this. There will be a money transfer fintech, which is basically the MoneyGram, Western Union. There are so many companies. They are the money transfer company basically, and then there will be a super agent in the country. For example, Thomas Cook is a super agent, and then many banks are a super agent. So through us, we will again distribute the license to the small players. For example, in a village, a jeweler can be a sub-agent of money, Western Union. So that means, we are extending the service to that level through the, a super agent, sub-agent model. So this is about the inward remittance. Hope I would have given some, understanding about the difference between outward remittances and inward remittances.
Illamparithi?
Yes, sir.
Yeah. How is the reach of this Western Union? Because if you see for the last couple of years, we could see this reach in a phenomenal way.
Right.
In India. How is it? How do you look at it?
Sir, that is basically because, so many Indians are staying abroad, especially the blue collar, ones. They're remitting money back to India. And Western Union is the number 1 money transfer company in the world. Okay. And the next player is MoneyGram, and then the Express Monies and all. But if you see the difference between Western Union and MoneyGram, the difference would be huge. Maybe if Western Union is at 10 times, the Express Money reach would be somewhere at 4 to 5. That's the kind of gap between Western Union and MoneyGram and other players. And the reach is so good only because they have this sub-agent model. They have aggressively approached the small-time retailers through the super agent, basically. So, for example, a jewelry can be a sub-agent, a supermarket can be wherever the money is there. That's how we analyze. For example, if I look at a petrol bunk, I look at the cash flowing there. So that means a customer, comes to a petrol bunk and says that this is my Western Union code. Can you give me 50,000? He'll be able to give immediately. So that's one of the assessment criteria. Wherever the money flows, that's why we are giving it to jewelries as well. Jewelries, foreign exchange companies, some retailers, so are the sub-agents. So because of this model, the distribution model, wherein the small players can be a part of this ecosystem and make some money. For a petrol bank or the jeweler, it is an enhanced footfall for him. So they look at the footfall and the little commission that they get through these companies. And because of this model and this aggressive appointment of sub-agents, their reach is too good.
Yeah, almost last mile reach kind of. Am I right?
Correct. Exactly, sir. You're right. That's the right words.
But what is the role of super agent here?
Super agent, basically what happens, sir? A money transfer company as a for a large player, they are basically a technology company. Western Union is basically a technology, even though it's a money transfer company. At the core, they are a technology company. MoneyGram is a technology company. So their bandwidth of appointing these small time retailers, especially the last mile players, is very less. And therefore, in between the super agents like Thomas Cook, certain banks, and some other, there's a company called Wiseman and all. We have that reach. We are at the ground, so we'll be able to extend the service. That is one. Second aspect is the control aspect, sir. Because as I told you, told everyone, whenever there is a transfer of money is involved, so are the frauds, so are the money laundering. Yeah. So who can control it? Sitting at some place, probably they will not be able to control. So we as super agents, we own the responsibility of controlling them. Even the RBI actually controls the super agents in order to control the sub agents. So two aspects. One is the reach, as you have rightly mentioned, it's a last mile reach. Second thing is the control aspects. And third thing, obviously, it's like easing the customer convenience. A person, for example, I'm just taking this thing, old parents in a village whose son is abroad or daughter is abroad should not be taking a lot of efforts to get that money every month. These companies can do that.
So it's a regulated system, am I right? Completely regulated system.
It's a completely regulated. It comes under the scheme of MTSS, under RBI, Money Transfer Service Scheme, and it does not come under the foreign exchange license.
Right. Please
and therefore,
go ahead.
And therefore, just a matter of knowledge. Therefore, if somebody sees a Western Union or MoneyGram board, probably they should not approach. They should think before approaching them for a transfer of money from India to abroad. But that said, even players like us, we are also an agent of MoneyGram Western Union. We also hold the boards of Western Union money. So point to note is that they have the board, they are doing inward money transfer. We need to check with them whether they have the license to handle the outward remittance. or sell the cards, whatever it is.
Okay.
Right. Okay. So the other aspects of this business, now we have seen the kind of license that are being issued by RBI, and we have also seen certain products. We have also seen the difference between the outward remittances and the inward remittances, which comes under the money transfer service scheme. Now, the other aspects which we have spoken over the period of, course of this this presentation. So we have to be vigilant and compliant in order to ensure that the law of the land is followed. So whenever we do a transaction, we have to be extremely careful in assessing the customer by collecting the proper KYCs, doing the due diligence, and screening the transactions. Otherwise, it will lead to money laundering. It might be used for illegal purposes. So being a finance company or a foreign exchange company, we keep on monitoring these areas, and that's why the technology helps us, as we have seen. Next is whatever we do, finally the idea is not to inconvenience the customer and ensure that the customer is having the best experience while doing a transaction. So therefore, concepts like document management system, wherein the customer need not come with a physical document and give it to us, these are all still in the nascent stage. It will definitely shape up soon. The video KYC, during the pandemic, we had a lot of transactions through the help of video KYC. For example, a student, say in some country, stranded, does not have any money, and their parents are in a remote area and they want to send money. Luckily, if he had got the card through any company, the parents can approach those companies and transfer the money and load the card. Now the student will be able to use the card immediately or withdraw cash through the card. That is one aspect. Especially during the COVID, even nobody was able to come out of their home. Then how would have they done the transactions? So that's when the video KYC has helped us. So we have done a lot of transactions through this model. And more than 30% of our transactions in foreign exchange are now happening through the online mode. So that's from the other aspects that that I thought I will share with you, and it's the interaction time.
How do you define a PEP?
So there are a lot of criteria, sir.
Okay.
Basically, basically we look at his net worth. Sometimes we deliberately ask for their documents, the transaction documents, and then we look at it. Sometimes, sir, what happens, even if the surname matches with the with the PEP, then we will do something called EDD, enhanced due diligence, in order to ensure that sometimes he may be PEP, he may be a politically exposed person, but he is doing it for the right thing. A PEP can travel, a PEP's son will be studying, daughter will be studying abroad, they need the foreign exchange. Just that we need to ensure that the influential people are not taking the hold of the system, and therefore we try to assess through several methods and then see whether the money that is flowing out of the country is going for the rightful purpose or not. But finally we do the transaction. It's just the due diligence mechanism that is going to change. We will not say no to anyone who is legally doing a transaction.
Yeah,
it's a tricky one.
That's right. Yeah.
Yes, sir. Sir, shall I call on students?
Yes, sir, please, sir. And the students are welcome to share their thoughts as well, so that if I, many things I don't know, especially the PB Fintech, I need to go back and check, which the doctor has told us. So,
yeah, Rajat, you can ask.
Greetings, sir. Myself, Rajat, I'm studying my first MBA at TCA. So my question is, how can we forecast the Forex? Because it's from you.
Rajat, I'm sorry, there is a slight lag, when it comes to me. I couldn't understand your question.
Okay, sir, just come again. Yeah. So how can we forecast Forex when it, especially from euro inward remittance to INR.
Okay, so good question. How to, basically you are trying to understand how to fix the rate, right? Or how to
exactly, sir, because we are into a business like we get inward remittance from euro,
right.
And it's like after the day we give for parking request, the value will shoot up, or either we will wait for the value to shoot up and it will decline. So how can we just forecast it?
So I may not be able to tell you on the inward remittance context, but from the outward remittance perspective, whenever you are transferring a money, a bulk amount or something, what the banks and some foreign exchange companies do is that we do cover the rates through a dealings room models. For example, Thomas Cook, we have a dealings room centrally which keeps on monitoring the market. So definitely, market will be forecasted for some reason. For example, if there is an election in a prominent country, then that day they will be careful, of not exposing their currency stock too much. So basically the dealings room predicts the price movement and then starts to cover the rates at a certain fixed rate. So they will have the international dealing. That's a separate thing. So at our level, what we do is we keep telling or keep giving inputs to the dealings room as to what is the demand in the market. I know that today I've sold in different forms. I would have remitted, I would have sold, whatever it is, so much of currencies today. Then that report gets to the dealings room then and there. It's a live report that we give to them. So once they assess the demand at this level, they will also block our rates at the same level. What we do is we will give the same rates to the customer for the next 24 hours or 48 hours, as the case may be. Suppose if I know Mr. Rajat is taking, $1,000, I have checked his documents. He is traveling, next week. Everything is perfect. Then I know that I'm going to do a transaction for $2,000 or $10,000 with Mr. Rajat. The moment I get that, I will block the rate for him, which simultaneously get covered at the dealings room level. Therefore, even if the rates go up tomorrow, within the next 24 hours, the customer is not going to incur the loss. So are the profits. Even if the rates come down, we will not get the advantage of it because it's blocked, and then some arrangement has been made with that blocked rate.
Okay. Yes. Thank you so much.
Yeah, I understand that a similar arrangement would be done by the intermediaries when it comes to the inward remittance as well.
Okay. So is there any factors which is depend on these exchange rates?
Several factors, everything, all the political, economic factors will affect the rate movements. Sometimes, it will be just a news that can affect the rates.
Okay, sir. Yeah. Thank you so much.
Thank you.
Yes, thank you, Rajat. Charumati, you can ask.
Good morning, sir. I'm Charumati from First MBA. Sir, my question is, how can RBI help in bringing down the foreign exchange rate, which is high?
Okay, again, we are an open market. RBI does not in the normal scenario intervene and cap the rates. Ours is an open market, and the rates are as per the international happenings. They are not actually, there's something called pegging. Our central bank does not do any pegging because one, our economy is very strong, and we are an open market. They don't they don't dictate the rates, but they dictate not dictate, they control the transactions that are happening in the country. Any transaction for that matter, any financial transaction, they control it through various methods.
Okay. Thank you, sir.
Thank you.
So shall we take a few more questions, sir? We have
yes,
one.
Sir, please. We can. Sir.
Sanjay, you can ask your question.
Sir, good afternoon, sir. Good afternoon,
Good afternoon,
sir.
Sanjay. Good afternoon, Sanjay.
I am Sanjay from First MBA, sir.
Hi.
Okay, sir. Sir, my question is, who has the authority to quote trade, sir?
The company that deals with foreign exchange, they have the authority. But then, yeah, that's a okay. So, though though there is no cap on the rates, that means the market is open. We are following a floating rate system. Every day we issue something called card rates. That means on that particular day, this is the maximum price that I will quote to a customer, and this is the minimum price that I will quote to a customer. For example, when I purchase, I will try to give less to the customer. I mean, just a business dynamics. It's not that we are giving less, just saying, or the dealer. Okay, when they sell, they will take little more extra from the customer. That is their profit, that's spread. So the spread at a macro level is capped actually in the form of card rate. So once usually the banks provide the card rates actually. Companies like Thomas Cook, we have our own dealings room. So therefore we decide that spread actually every day. So basically the banks and the people who have certain infrastructure in terms of managing the forex business can quote. And it goes by the IBR, right? There is something called interbank rate. So that's the base.
Okay, sir. Sir, one more question, sir.
Yeah.
And this amount will change daily or which time period it will change, sir?
It depends. Usually the market closes, by evening 5 or 6 o'clock. After that, the rate will not be fluctuating. Between the office hours, the rate will be fluctuating. That's basically the market time. And on Saturdays and Sundays, the market is closed. So we follow, or anybody in the this industry will follow the previous day's rates, which is the Friday. Suppose if you're going on a Sunday, they will be following the Friday rate.
Oh, okay. Thank you, sir.
Yeah, thank you.
Mahalingam, you can ask.
So good afternoon, sir.
Good
My
afternoon,
name is Mahalingam, first year MBA. So the session was really interesting, sir. And
thank you.
So my question to you is, so as you know that RBI has launched UPI 123 for targeting the rural customers.
Right.
So I would like to know more about the technology in terms of consumer behavior and how it will impact the economy.
Okay, so basically the moment payment comes into a picture, there were different types of clearing mechanism through RBI. For example, if you are transferring money from one bank to another bank, there were several clearing systems in the past actually. They're still there. There's something called Aadhaar bridge payment system, ABPS we call. There is NACH, and then IMPS, immediate payment services. So many other enabled payment system was there. So all these things were different platforms. Suppose when a customer was actually transferring, or a bank was having one mode of platform, if the money comes from a different platform, then this integration was taking time. This communication between, say, for example, IMPS from one side and Aadhaar bridge payment system from another side. So this communication was taking time through UPI, and they have introduced an API, right? All the systems from the buyer side and the sender side were integrated under the UPI mechanism. So every transaction that goes or comes in will communicate with this UPI layer and then flows. And therefore, the intermediaries were actually channelized. That's how the speed was ensured in the UPI. That's one. Second thing, UPI, it is transparent, it is fast also. And if you would have observed, suppose if somebody wants to transfer money to you through Google Pay, previously we would be sharing our account number. Now it is not needed, because UPI works through the virtual, virtual addresses. So my name would be like some Ilam at some bank.com. So that's how it is going. It's a virtual address that I'm using. Therefore, the data security is more when it comes to UPI. Next thing, what they have done is, initially it was only the smartphone users who were able to access the UPI payments. Now even the feature phone, the old time Nokia phones can be used to initiate a UPI transaction. So therefore its impact is already there everywhere. The only place where the UPI is not able to make an impact is the SME and MSME payment side. So that's where I said, there's one more, umbrella organization that is coming up to address this need.
Sir, I would like to know that which organizations.
One second. This ONDC, Open Network for Digital Commerce, that's the company, that's the organization that is going to imitate an UPI like structure in the SME and MSME. See, apart from this, even there are a lot of fintech players who are trying to capture this market, especially they are providing solutions for MSMEs. Again, the issue is going to be the integration. Who is going to bring all these different players in one platform? So I think this is where this ONDC is going to help. I think we need to wait and watch. Maybe some other technology will come up, but as of now, the adoption of UPI in the business B2B is very less, and ONDC tries to address that need.
Thank you, sir.
Thank you.
Thank you, Malingam. Sir, among this public and private sector banks,
right, sir,
which one has positioned themselves very well among the general public when it comes for a Forex transaction?
Sir, actually, what I am observing is that, both of them, I don't want to name the banks, but definitely certain private players are very, I would not use the word aggressive, but very proactive in wooing the customers towards them. That said, public sector banks are also trying to catch up. But the one problem for both the public sector and private sector bank is that foreign exchange is not a core product for them. They would not be spending more time in initiating a transfer. For example, if you are transferring money to a university, there's so many things that they need to look at. There will be SWIFT code, so many things. A normal cashier in the bank will not have time to do all these things. Therefore, the appetite at the ground level towards foreign exchange transaction are generally low. So that is where, people like us, we are like, our bread and butter is foreign exchange. Therefore, we are sometimes, I take my, staff to train the bankers on how to identify a counterfeit note. So expertise is there, with players like us, pure play foreign exchange companies. But then banks have resources. But I would say both of them, sir. Both, of them are now trying to adopt skills. But definitely they may not be concentrating more on the foreign exchange transactions, especially this retail. If it is a trade related foreign exchange, yes. For example, if you are importing something, exporting something, then the banks will be interested in handling it. The retail kind of things, even if they are interested, it is going to take time for them to catch up with the private players.
Thank you, sir.
Thank you.
There are no more questions. Students, if you have any questions, you can unmute and ask. Yes. So there are no more questions, sir. Shall we wrap it up?
Yes, sir. I think this is, one of the best sessions that I've had, and I feel really happy that, and I feel thankful to Dr. AGV, the director, who thought of my name and invited for this session. I take immense pleasure now after interacting with the students, looking at their interest, and I wish them well. I wish them a lot of success, and I also would recommend them fintech as an option as their career, because it also has an impact on the bottom of the pyramid. That's what I have mentioned in one of the slides. You're going to be doing something for the people who are at the bottom of the pyramid if you are in fintech, because money is everything and fintech is actually revolutionizing it. So look at this as an option. If you are interested, try to delve more on this, learn something. And definitely there are a lot of companies, a lot of banks will be interested in taking the students who have the knowledge on the fintech.
Yes. Thank you, sir. We'll proceed to the vote of thanks. Let me invite Kaushika, first MBA, to propose vote of thanks.
Before that, in fact, Illamparithi, I'm not sparing any BIMites at all. In fact, I take the liberty of getting all the BIMites on board for this kind of program. And of course, they are also more than willing to help me out in this aspect. Thank you very much, Illamparithi, though it is a bit dry subject for people like me. Okay. We are not.
Yeah, true. I was worried about that.
But you made it quite interesting. Okay, with lots of examples, lots of the developments which are happening in the industry, especially in the industry. So it shows how you keep yourself completely updated with reference to this industry. Thank you very much for being with us.
Thank you, sir. Pleasure is mine. And if it is possible for me, I will also try to feed a certain info if I feel it is necessary through you to the students.
By all means, you are most welcome. Thanks a lot for that. Okay.
Thank you.
We also have a mentor system, Illamparithi. Okay?
Right.
We are very serious about it. Suppose if some of the students who are interested to pursue their career in fintech industry, do you mind helping them out, being a mentor kind of? Hello?
Sir, I think
there is a lag. Yeah, there is a lag.
Okay. Suppose if some of the students are quite interested in pursuing their career in fintech industry,
right?
Can you be a mentor kind of?
Absolutely, absolutely.
Okay. You can have once in a month or once in 2 months, you can have an online interaction with them and you can guide them properly.
Absolutely.
Yeah.
Pleasure.
Yeah.
Will do that.
So nice of you. So nice of you. Right. Okay. Over to Kaushika.
Good afternoon, everyone. It's my privilege to propose the vote of thanks. On behalf of DJME, I would like to thank our speaker, Mr. Illamparithi Jayabalan, for sparing his time with us. Thank you, sir. I would like to thank our director, Dr. AGV Narayan, for his continuous encouragement and support. I would like to thank our faculties for their support. Finally, I would like to thank students of DJME and also other participants for attending today's session. Have a nice day.
Thank you all.
Thank you very much, Illamparithi. Yeah, have a nice weekend and take care.
Thank you, sir. Thank you.
Yeah, right. Bye-bye.
Thank you, professors. Thank you. Bye.
Yeah.